Welcome to OpenECRI's Trader Training. My name is Toby Gennaro. What I'll be talking about today is how to determine the strength of a trend. We'll look at the correct angles and geometry of how the moving averages set up and confirm strong trends, and this will help us effectively read market direction and decide who is in control at any moment in time. Is it the bulls, the bears, or possibly a neutral market with no one in control? So let's take a look. Now, once we've identified the trend and the price action characteristics that we want, we will also need to see the moving averages in a strong trending formation. So what are moving averages anyway? A moving average is just that. It's an average of price movement on a candle by candle basis. So as the moving average line forms with each candle, it actually smooths out the short-term price fluctuations and highlights the trend for us. As we can see on this chart, we set up our moving averages as a 10, 20, 50, and a 200 period to get the complete picture of what's going on in the trend. The longer term trend average is the 200 period, which acts as our anchor. The medium term trend average is the 50 period, which highlights the current trend. In the short term, the 10 and the 20 period averages are actually highlighting our buy-sell zone for this trend. So as the price action pulls back into the 10 and 20 period moving averages, this becomes our buy-sell setup for the trend. Now, when you set up your charts like this, many folks always ask if it's better to use a simple or an exponential moving average. And really, it makes no difference whatsoever. The moving averages provide us just an approximation of a buying and selling zone. So try to get comfortable with this concept of a moving average zone. And whenever price gets too far away from the averages, it has to snap back. And then that snapback is what creates our trading opportunity. So with this concept of a moving average zone, how do we use the moving averages to confirm the trend and identify a potential trade setting up? It's important to understand that moving averages indicate a dynamic equilibrium between buyers and sellers in the market. So when price gets too far away from its averages, buyers or sellers step in to leverage that opportunity, and this is what creates the dynamic relationship between price and the moving averages. This is essentially a point of equilibrium where price is most comfortable at that particular point in time. So while there is equilibrium between price and the averages, there is also geometry. And the moving averages geometry indicates the shape of the trend or what it looks like. The moving average pattern that we're looking for is one where all of the moving averages are trending and they all are fanning out in order. So in an uptrend, the proper order would be the 200 period at the bottom, then the 50 period, then the 20 period, and then the 10 period on top, just as what's pictured here. We can then trade this setup after price pulls back into the 10 and 20 period moving average zone, which in this example, the zone is highlighted in yellow. And at first glance, this may look a bit arbitrary, but in the advanced education course, I'll show you how to introduce some precision into this equation by understanding what the actual buy-sell signal looks like. So keep in mind, this is just one aspect of identifying strong trends. If you're interested in learning more about technical trading, including trend reversals and identifying entry and exit points within a trend, check out the OpenECRI website under Education and look for other trading videos and webinars, or you can call customer service for more information and educational events. Thanks for watching OpenECRI's Trading Education.